From New York City for our viewers worldwide, I'm Matt Miller. A lot of uncertainty around elections could cause some volatility. The countdown to the open starts right now. Coming up, a busy week ahead with Powell speaking tomorrow and the jobs report on Friday. Politics propelling markets with results out of France and uncertainty here in the U.S. Plus, Boeing buying back Spirit Aero Systems in an all-stock deal after 2 decades of separation. We begin, though, with the big issue, stocks kicking off the second half of the year on a positive note.
Now we're at a point where it's really multiple expansion that's boosting names like NVIDIA, like Amazon. And so the question is, how much can that sustain, mostly as the earnings growth rate for the Magnificent Seven decelerates significantly into 25. There's room for downside surprise in earnings.
Joining us now is Emily Bowersock Hill, Bowersock Capital Partners CEO and founding partner. And Emily, it's great to have you on, consistently ranked one of the top female fund managers and serving on the Kansas public employee retirement system. So you have a lot of experience on Wall Street. And what we're seeing right now is just new high after new high. Mostly, it seems, propelled by one company or maybe 7 if you look at it broadly. Does that does that encourage conviction for you?
I think one of the things we've been seeing in the market is a massive returns to scale. The Mag 7 are incredibly profitable companies with a lot of cash on their balance sheet. And frankly, governments around the world, particularly in the US, their ability to regulate has been neutered. So I expect that scale to continue. It's not surprising that they're continuing to rise in value. And frankly, I expect that momentum to continue. I do not think we are in bubble territory the way we were in 2000. These companies actually have earnings, and companies are being punished when they don't come out with earnings that are sufficient for, to justify the price. So I don't think we're, again, in bubble territory. I do think the valuation of companies like NVIDIA has gotten a little bit ridiculous. So I think people should expect short-term corrections, but in some of these stocks. But for the long term, I think that's, quite frankly, we would at least veer towards mega cap companies with a lot of scale and a lot of cash. Yeah, Torsten Slok writing over the weekend that 35% of the S&P 500 is 10 companies, but they only have 23% of the earnings. Do you expect, the remaining 490 to backfill what we've seen with the top 10? I think so, and here's why I think so. I would argue that the possibility that we are going into a roaring 20s, similar to what we saw after the flu pandemic in 1919, is becoming increasingly possible. And when you have something like a pandemic in society, it touches off a wave of innovation. We had to change the way we lived. We had to change the way we worked. We saw an incredibly rapid change in technology and in the use of technology. And I think the next 5 to 10 years, that will bear fruit. We're going to see the benefits of that. And unfortunately, or fortunately, depending on how you look at it, I think a lot of those are going to accrue to these mega cap companies with cash and scale. But I do think that that tide, in this case, is going to lift most boats. For companies that are continuing to expand margins, we're out of the profit recession. The benefits of AI and of this innovation will begin to spread across other sectors of the economy, especially healthcare and industrials.
All right. Well, certainly the Fed is watching AI and its effects closely. And a big week for the Fed with Chair Powell speaking tomorrow. Jobs data coming out on Friday. I want to get over to Michael McKee, our chief economics and policy correspondent, for what to expect. Mike?
Well, it is the first week of the month, which means a lot of data. We cram a holiday in there, which makes it even more complicated. Today we get some manufacturing numbers, S&P manufacturing PMI and the ISM manufacturing numbers. The narrative has been the economy is slowing, and the ISM has been below 50 for quite some time. Does it go back over and interrupt that narrative, or does the same continue? We'll find out. Tomorrow, Jay Powell. First time out of 4 times he speaks this month, along with Christine Lagarde, who is, of course, the French president of the ECB. So politics overhanging that as well. Jolts as well on Tuesday. Wednesday, jobless claims, ADP, ISM services. John Williams is speaking, and Fed minutes. Those of you on trading desks have to delay your departure for the Hamptons or the Jersey Shore by about 10 or 15 minutes. Thursday, Matt will be out tooling around in his sports car, and the rest of us will be maybe cooking some hot dogs on the grill. Friday, June jobs, and even though a lot of people are going to be off, we may get some volatility that day in the markets, but that's going to be important to the Fed. They want to see, again, is the economy slowing? You know, I mentioned that this is the first of 4 for Jay Powell this month. He comes out next week with his Humphrey Hawkins testimony, 2 days on Capitol Hill. The week after that, he's interviewed at the Economic Club of Washington. And then July 31st is that Fed meeting with his press conference. So you're not going to have to figure out what the Fed is thinking. He's going to be around a lot to tell you. What the markets are thinking right now is a greater possibility that we get a September rate cut and perhaps 2 by the end of the year. We're moving in that direction. We shall see at the end of this week whether the data pushes one way or another. You know, Matt, I was thinking, Emily's right about the productivity in the 1920s. It really went up a lot as technology came in there. The question is, do we have the roaring 20s come back? I'm going to watch and see. When you put on spats, we'll know.
I'm ready. I'm ready. And by the way, I am currently testing out C8 Corvette E-Ray, which is like the perfect 4th of July sports car. 650 horsepower, 0 to 60 in 2.5 seconds.
It looks great. I saw the picture. I just wonder where the kiddie seats go.
No kids. No kids in this car. Michael McKee, thanks very much for that. We'll be watching the economic data closely, and of course, big releases out at 9:45 and 10 o'clock, and we'll bring them to you live. Emily Bowersock Hill of Bowersock Capital still with us. And Emily, I have a viewer writing in to ask about stocks this year. He says we're in the second half, so it's a good time to ask, where will stocks finish this year? What's your take?
I'm so glad you asked that question. I think, frankly, as long as there's some risks to my thesis here, but I would expect the momentum to continue over the next 6 months or so. You know, frankly, it's this frenzy over AI, I think, has legs, and I think it's despite the fact that some of these stocks are overvalued in the short term, this is going to be a bonanza for companies at the forefront. And frankly, I do think the Fed will cut rates once. They've become very adept at signaling what they are going to do. And I think we should believe them. I would expect a rate cut either in September or later in the fall. And I do think the risks to this are a few. First of all, we obviously have heightened geopolitical risks. We have a war in the Middle East, in Ukraine. We've got increasing trade tensions with China. And frankly, I would consider rising populism around the world to be a significant risk to markets. So, for example, in this country, unlike in 2016, when the market viewed a Trump election as positive for markets, I don't expect that to be the reaction if Trump is elected this time around. And the reason for that is that he's threatening to deport millions of immigrants, 80 million immigrants, and he's saying that he would put 60% tariffs on goods coming into China from China and 10% on other goods. And I probably don't need to tell the audience here that tariffs and deporting immigrants are both highly inflationary. I think if we hadn't had the number of immigrants coming into this economy that we've had in the last year or two, we would have an even tighter labor market, and we would likely have wages that were continuing to rise. So, you know, we'll see, but I do think that's a risk to my thesis. As long as we don't have one of those geopolitical risks come into play, I would expect this upward momentum to continue.
Is there another side of that Trump coin, though, Emily? Because You would expect Trump also to decrease regulation. We saw the Chevron decision from the Supreme Court last week. You also have tax cuts that would stay in place, at least for the wealthy and large corporations. And then, of course, there is the fact that he doesn't always deliver on these campaign promises, right? In 2016, he said he was going to build a wall and have Mexico pay for it. Those things didn't happen. So maybe it's just talk in terms of the deportations and the big tariffs.
I would suggest that people listen to what he's saying this time around, because the kind of people that are going to go to Washington with him if he becomes president are very different than the team that he took with him in 2016. I think you're absolutely right that the primary reason that the market reacted positively in 2016 was deregulation and the promise of lower taxes. So I think at this point, the market doesn't really, as we all know, like uncertainty. And his rhetoric has become increasingly unhinged over the last few years. So I don't expect that kind of excitement over deregulation. Do I expect the market to crash, if Trump is elected? Certainly not. I think we will just see more volatility, because his rhetoric, if he even attempts to put some of these policies in place, would be enough to cause significant disruption.
Can I ask about NVIDIA specifically? I mean, only because you mentioned the valuation in your notes, in the notes that I've got for you, saying that, it's gone too far too fast. The rich valuation, I think ludicrous is the word you used there. Would you bet against NVIDIA, even though you're bullish on the rest of the market?
Okay, absolutely not. First of all, as of last week, NVIDIA had corrected about 13%. I'm not sure exactly where it is at the moment. But we're suggesting to clients that they let some of these mega cap growth winners, including NVIDIA, run. As long as you're a patient investor, I have a lot of confidence in that business model and that it's an incredibly successful company. And one of the reasons the price keeps rising is that they're coming out with earnings that just blow everybody away. So I think the main argument is that in the short term, NVIDIA is wildly overpriced. But that doesn't mean that, we know that doesn't work. To sell NVIDIA, pay your capital gains tax and then try to find the perfect time to get back in. If you own it, hang on to it.
All right. And I guess that goes for the rest of the winners as well, right? You're not saying take profits and use those to fund purchases elsewhere in the market, but hold on to your winners and then look for a broadening.
Yes, that is what I'm suggesting. I wouldn't chase these returns. So if you aren't tilted towards mega cap growth, including NVIDIA, I probably wouldn't pile in now, because it's natural. And I do think, while I'm not as concerned about the breadth of the market as some other people, I do think there is a little bit of a risk, more than a little bit of a risk, that if a company like NVIDIA or some of these high flyers were to correct significantly, it would pull the rest of the market down with them. And so I think it's just a question of when that would happen.
I wonder, by the way, Emily, how you're putting technology to work at Bowersock Capital. You've had a pretty illustrious career, from Yale to McKinsey to Morgan Stanley, and now at your own shop there. And you seem very bullish. AI. How can you use technology in your business?
That is a really good question. One of the things we're starting to do is to have AI take notes for our meetings. They're not perfect yet, but I think getting that process into place, that actually takes my team, a fair amount of time to organize and write out notes. I think it's going to provide a boost to productivity. But on that note, I do want to say, when I say that I think it's possible we're going into another roaring 20s, I think it's possible. I would give that, a 50% likelihood. I think the chances of it are rising. I do think that geopolitical risks are highly elevated. And I think some of these geopolitical risks, I didn't mention climate change, for example, are inflationary and would make it difficult for the Fed to cut rates. So there are all sorts of things that would go wrong. But in general, I am not, telling my clients, I'm not suggesting to my clients that they drastically pare back their mega cap growth stocks and tech stocks that have been the big winners in their portfolios.
All right, great getting some time with you. Hope we can get you back on. Emily Bowersock Hill there of Bowersock Capital. Joining us now with a look at some of the individual movers ahead of the opening bell, here's Abigail Doolittle. Abby?
Let's start out with a flashy stock this morning, Matt, and that is Chewy. Shares are up more than 10% after Roaring Kitty, also known as Keith Gill, disclosed a $245 million stake in the shares. That's a roughly $9 million stake filed with the SEC. It's a passive stake. Off of the highs, though, at the highs, this stock had been up 30%. And if you recall last week on that meme of a cartoon dog, at one point on an intraday basis, the stock had gone up 40%. Turning to some other movers on the morning, some big ones. We do have the shares of Tesla trading higher ahead of their EV delivery numbers out for the second quarter, out tomorrow, expected to come in at a little more than 441,000 EVs delivered. NIO up 4.6% after a strong delivery report. They delivered more than 21,000 cars in the last quarter, ahead of what had been expected and also showing growth. We have Spirit Aero Systems up 4%. You were mentioning that Boeing did buy back a part of the company in an all-stock deal. In addition, Airbus buying aircraft-related businesses. That was expected to happen but wasn't known. And then finally, we started off on Chewy. Let's end on GameStop, down 6.5%, because that same Roaring Kitty, or Keith Gill, is accused of a quote-unquote pump-and-dump scheme in another class action lawsuit. Plus, Matt, investors may be worried that he's taking his attention away from GameStop and putting it toward Chewy.
If showing just one meme picture of yourself at a computer is a pump, I think a lot of people should be worried. Abigail Doolittle, thanks very much for that. Coming up, Boeing agrees to buy back Spirit Aero Systems in an all-stock deal worth nearly $5 billion. We'll bring you the details on that deal next. This is Bloomberg. All right, the 20-year separation is over. Boeing agreeing to buy back Spirit Aero Systems in an all-stock deal valued at $4.7 billion. That doesn't include the debt. The total transaction is more than $8 billion. This comes as the DOJ is preparing to slap criminal fraud charges on Boeing. For all things airplane, we're joined by Sid Philip, Bloomberg's deputy team leader and senior reporter for global aviation. So, Sid, tell us first off about this deal. You know, it was widely telegraphed. We knew there was some kind of combination that was going to happen. So what's it look like now that the details are final?
Morning, Matt. So yeah, Boeing is in the midst of taking over its former unit Spirit, and they've said that they'll pay for over $4.6 billion, and essentially they will try and complete this deal by mid-2025 is the timeline that they've set. And as part of the deal, Spirit is also getting rid of its Airbus-related businesses. And for that, Airbus will pay the princely sum of $1, and they will actually, in fact, get money from Spirit of $559 million. And so it is a good deal for Airbus in terms of being able to secure their supply chain at a time when they're struggling with their supply chain. It's also it's a homecoming for Boeing, and they can bring back a former unit that has been source of a lot of quality issues for them, and they can bring it back into their fold and try and be able to turn that around and make sure that they can be aligned on the same quality issues. So
essentially, Sid, they need to do better, Boeing does, and one of the ways they're going to try and do that is pay, $8.3 billion to get Spirit back into the fold. Still, it looks like the U.S. Department of Justice is going to charge Boeing with criminal fraud after finding that they violated a deferred prosecution agreement. What do we know about that?
Yeah, so Bloomberg News reported late on Sunday that essentially the DOJ is leaning towards basically finding Boeing guilty, asking Boeing to take a deal that would basically have them plead guilty to corporate fraud, and they would also that would basically put them under pressure in terms of government contracting and other things. But at the same time, the alternative is for Boeing to actually face a trial, and that could be more damaging, especially for a company that's trying to turn around and trying to get their business afloat again and try and earn cash again.
It doesn't really look like Boeing has taken that much of a hit, Sid, in terms of its stock price. Right now we're trading at 182. Okay, we've been a little bit higher than 150 right at the start of the year, or rather the end of 2023. But it's been hovering around this price for the past 3 or 4 years. At what point do investors say they've lost enough that I can go in and buy this with some certainty?
It's always tricky with Boeing. I mean, every time you think they've turned around another corner, something else hits them. And so it's been a really difficult period for Boeing. And the company has been trying to move along in terms of just getting their stuff together, in terms of quality, in terms of sort of getting new management in. They've been talking about how they want to ramp up deliveries again from when the FAA allows them to. So they've got a lot of issues that they need to resolve at the moment, and they're in that sort of consolidation phase where they're trying to try and assess the issues and sort of work through them. And so it's going to be a bumpy time for Boeing, at least for the next couple of months, until they can sort of get deliveries back on track and sort of smooth sailing ahead. It's
obviously an industry with very long lead times. Does any of this give Airbus an advantage? The problems that Boeing's been having for the past few years, does it mean that, airlines are more likely to order Airbus aircraft instead of Boeing?
Not really. So Airbus has been struggling with its own supply chain gremlins. And I mean, they're sold out to the end of the decade on their A320, which is the Boeing 737 MAX competitor. And they've been sort of cutting their forecast for the year. I mean, Airbus cut their delivery target for 2024 to 770 from 800 just last week. And they've been talking about how the supply chain isn't improving, it's actually getting worse. So at the moment, Airbus isn't able to cash in on any of this, and they're struggling with their own issues. And so as a result, airlines are sort of stuck between sort of waiting for new planes or just flying older aircraft.
All right, Sid, thanks very much. Always great to talk to you. Sid Philip, one of our foremost experts on aircraft and airlines. They're coming to us out of London. Coming up, the morning calls, and then later, Stuart Kaiser, Citi head of U.S. equity trading strategy, joins us. This is Bloomberg. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, UBS is upgrading Birkenstock to buy and raising its price target on the footwear maker to a street high. The analyst says the company can achieve stronger sales and margins over the long term. Next up, Goldman Sachs is raising Intercontinental Exchange to a buy. The firm sees the company's earnings growth inflecting, supported by structural tailwinds and global leadership in energy markets. Finally, Goldman Sachs initiating coverage on T-Mobile with a buy rating. The analyst says the U.S. telecom industry is in a state of transformation and sees wireless operators entering a period where both competitive intensity and capital intensity are moderating simultaneously. We've got a toga party on the New York Stock Exchange, kicking off the quarter and the half. Toga is ringing the bell over at the NASDAQ Breakthrough T1D. They're ringing the bell. We have gains in futures, so it looks like we could kick it off on a positive note. One of the stocks that we're going to be watching at the open is Chewy, but I'll get to that in just 1 second. It's an unbelievable story. Let's take a look at some of the other assets that are important to traders here. The euro dollar at 107.5, even after the far right took 33% of the vote in France over the weekend. There's still another round of voting to come, but we're still hanging there and haven't really moved from this band of trading for the euro dollar. The 10-year yield at 4.45, and NYMEX crude right now about 60 cents a barrel to 82.15. One of the stocks that we're watching at the open, as I said, is Chewy. An amazing story here. The online pet supplier soaring after Keith Gill, Roaring Kitty, disclosed a $245 million stake in that company. At 6.6% of the company, Bloomberg's Abigail Doolittle joins us now for more. Abby?
This is certainly a fun one, Matt. And of course, it started last week when Keith Gill, also known as Roaring Kitty on X, posted a picture of a cartoon dog. Now, on that cartoon dog meme, the stock went from being down on the day to up more than 30% on the close. close. It closed up just slightly. The day after, down a little bit. So investors not quite sure. But you can see the excitement that he created from the original meme factor back in 2020, 2021 into stocks today. So the stock right now up about 7% off of its highs in the morning today. In the pre-market, up about 30% on the disclosure of this $245 million passive stake, about 6.6%, as you said, or 9 million shares. Folks perhaps not quite knowing what to make of this. Plus, it should be noted, there is a roughly 18% short interest on this stock. And Matt, I would be remiss if I didn't bring GameStop into the picture, because this stock down 6.7%. And this, of course, is where this is his bread and butter meme stock even this year, creating some big volatility on a meme of a man, presumably him or somebody else, leaning forward to play a game. That stock, as you have pointed out many times, had been a $10 stock. It is now, even though it's down on the day, a $23 stock. And it's interesting, Chewy had been a roughly $15 stock. It's now basically a $30 stock. One connecting factor, of course, Ryan Cohen had been the founder of Chewy and is the CEO of GameStop. More to come on this story, Matt.
It's interesting, Abigail. There are people, you say, suspecting that Keith Gill is taking part in a pump and dump scheme, or he put that together. But all he did was post a picture of a person playing a video game, right? Or show that he owns a stake, passive or not.
Yes, in fact, that is the case. There is a class action lawsuit out there accusing him of a pump and dump scheme in GameStop. A lot of money was made and lost at the highs GameStop. I think on the April-May moves had made it up to 60 or 70. They will, of course, have to prove that, and you would think that the SEC perhaps becomes involved in this. I think some of this goes back to the 2021 when that original meme rally happened. It was this sense of the retail investor taking on the institutional investor, a real sense of moral camaraderie, whereas now I think folks are a little bit less certain in terms of what's going on here, and that maybe something is amiss. We don't know that that's the case, but there seems to be a sentiment among some of the sources on Wall Street that I talked to about it. And frankly, when you do see a stock go up 40% intraday on the picture of a dog being posted on X, you do wonder.
Yeah. All right, Abigail, thanks very much. Abigail Doolittle, I doubt that's the last we'll be talking about that. Boeing has agreed to buy Spirit Aero Systems in an all-stock deal. Bloomberg's Simone Foxman is here with more on this. We finally get the details of the Boeing Spirit deal.
Yeah, that's right. This deal worth $4.7 billion. It's an all-stock deal. The total transaction value about double that, $8.3 billion, and that includes Spirit Aero Systems net debt. But Matt, as you mentioned, this is a deal we know has been in the pipeline for a long time. For Spirit Aero Systems, this is a 30% premium to that February 29th closing price. That was when both companies confirmed that there were deal talks in the mix. This will likely close in the middle of next year. This is a complicated transaction, too, because Airbus is actually going to buy some parts of the company that make components for its aircraft. But it's something that comes at a time...
For $1.
For $1.
And actually get paid like almost $600 million.
Yeah.
That's the kind of buy I want to be making, you know?
Yeah, but, you know, I mean, for Spirit Aero Systems, which has been challenged, and for Boeing, of course, this is something regulators are expected to really welcome here because it comes just hours after we got the news that the U.S. Justice Department, according to Bloomberg sources, is going to charge the company with criminal fraud for violating a 2021 deferred prosecution agreement tied to those fatal crashes about 5 years ago. The company now has to decide whether it's going to plead guilty or it's going to go to trial. If it pleads guilty, that has a real impact on potentially its government contracts. Nick Cunningham, an analyst at agency Partners in London, says the DOJ charge, either way, this is a terrible outcome for Boeing, and he doesn't like the deal either. He says Boeing gains very little from this transaction, but essentially kind of forced into this map.
All right, Simone, thanks very much. Bloomberg Simone Foxman talking to us about the Boeing deal. Now let's talk Tesla. Shares higher ahead of its second quarter delivery numbers out tomorrow. For more, we're joined by Craig Trudell, Bloomberg's global autos editor. And Craig, I remember a time when these numbers were just higher and higher and higher every quarter, and now we're looking for a drop.
Yeah, not only that, a second consecutive year-over-year decline. We haven't seen that since this company was phasing out the Roadster, its very first vehicle that it put out on the market. And so this is incredibly rare for the company. As we've seen just in the last couple of weeks, though, there is sort of a willingness on the part of some investors to look beyond these quarterly results and the prolonged sales slump that we're seeing from the company, and get excited about some of the various things that Musk has been talking about of late. He's really hyped the prospects for the humanoid robot that Tesla is working on, and of course we know that he's scheduled an unveiling for a dedicated robo-taxi in August. And so there does seem to be quite a bit of sort of speculation building for both of those products, and that seems to be flowing into the stock, which is still before today was down 20% for the year. I
had a drive in a Tesla Roadster back in 2010. That was my first ever experience with range anxiety. Last week I ran a GMC Hummer down to 0 miles and 0% battery. My own fault, because that thing has a lot of range. But in terms of EV demand, Craig, have we seen globally a drop for full BEV demand? Are people globally shifting to hybrids or back to gas?
We're seeing quite a bit of momentum for hybrids and plug-in hybrids, even doing extremely well in China of all places. People generally view China as sort of on the leading edge for battery electric vehicles, and rightly so. They sell quite a bit more than any other country in the world. But in terms of plug-in hybrids, globally, just in the last few years, the compound annualized growth rate for plug-in hybrids has actually been better than battery electric vehicles. So we have seen some manufacturers really dial back their plans. We've heard Mercedes talk about that recently and have a great story out on the terminal today about that. But this is pretty much across the board, whether it's GM or Ford, again Mercedes, quite a few manufacturers that just a few years ago were talking about roughly when they would be able to phase out the combustion engine, really sort of saying plainly that the combustion car still has quite a bit left in the tank, if you will.
I like the pun. Craig, thanks so much for joining us. Craig Trudell there, our global auto czar, giving a shout out to Chris Ralvald and Elizabeth Behrman, who wrote that Mercedes story. Check it out on the terminal. MBGGY is the ticker. Joining us now is Stuart Kaiser, head of U.S. equity trading strategy at Citi. And Stuart, first of all, thanks very much for coming in. Appreciate you joining us on the first day of the new quarter, first day of the new half. We're up in terms of futures. Do you expect we'll hit new records again this year?
Yeah, I mean, that's our view. We still remain pretty constructive on U.S. equities. 2Q, I'd call probably a 6 out of 10 from an equity perspective. I think it actually felt better for most people because we rallied so hard off of those April lows. But big picture, you're up about 3.9%. Solid outperformance in both bonds and commodities. And in our view, you kind of continue to run long equity risk as long as that U.S. labor market stays strong. And we're going to get a tremendous amount of data on that this week. So that's our view, is to remain long. And we'll probably have to update that over the course of the next few days.
I think the expectation is for 195,000 jobs on Friday. Is that enough? I mean, do we keep running at that pace?
I think anything over 150 is probably enough to support the rally. I think if you're printing 190 plus with an unemployment rate of about 4%, which is the consensus view, that should keep equities moving higher. Obviously, earnings starting end of next week with the large cap banks. So that's going to be sort of the next test for markets, is how higher expectations going into the earnings season. But yeah, I think if you're printing 190K jobs, equities will do just fine in that environment.
Well, in earnings, I mean, I was talking earlier about Torsten Slok sent a note yesterday, I think, showing that the top 10 companies in the S&P are worth 35% of the market cap and only 23% of the earnings. And if you take out the Mag 7, right, we don't see the earnings expansion that everybody's been raving about the last few quarters. The 493 are still contracting, or at least they were.
Yeah, I think on a forecast basis, the 493 will probably be up mid-single digits from an EPS growth perspective. So it's not horrible on that end, but it's not the double-digit earnings growth that's propelling the market. Agree with the concentration, both in returns and market cap. Our pushback against that is that's kind of normal for U.S. equity markets. If you're going to pull out the Mag 7 today, then you have to go back and pull out GE in the 90s and IBM in the 80s, et cetera. I mean, generally, there's a theme or a group of stocks that are driving the growth in the market, and that's the case today. It might be a little extra. Right now. But, I don't think it's healthy to kind of back out of the markets because the innovative stocks are generating too much return. So
Emily Bowers-Hill was on earlier saying the rich valuation of NVIDIA was ludicrous. That was the word she used. But still, she's not going to sell that stock, right? I mean, you think investors should buy the Qs now?
Yeah, we do. I mean, part of that seasonal. For some odd reason, over the last 20 years, the Qs do great in July. Probably, that centers around the strong earnings growth, and we do like upside in Qs, at least tactically, for kind of the next 1 to 3 months. In terms of valuation, look, valuation to us is potential energy. So yeah, it is a relatively expensive stock, but that's only going to matter if something releases that potential energy. You're going to need to see disappointment on the fundamental side for NVIDIA. So I think unless you anticipate that fundamental disappointment in the near term, then the valuation necessarily shouldn't be your concern in our view.
What about the losers? I mean, Tesla, I'm looking at the description page, down 18% year to date, still worth $650 billion, so like all of the other car makers combined. But look, we're expecting, as Craig Trudell just told us, a 5.5% drop in deliveries tomorrow. What's your outlook?
Yeah, I think I agree with what Craig said. This is yourself too. This is a laggard stock year to date. You have 3 pretty important catalysts coming up in deliveries, then earnings, and then followed by the robotaxi day in early August. Our view is, with the stock trading where it is, those events are probably underpriced, and we do like owning some upside in Tesla, either through the shares or through call options. So this is kind of a view of, to your point, still a very popular, strong stock, has materially underperformed year to date, and we do think those 3 events, as Craig detailed, are probably going to shift sentiment a little bit positive.
I like to buy cars. I don't have enough money to buy the cars that I want, so I typically end up borrowing money to fund my addiction. Right now, it's very expensive with rates where they are. Do you expect the Fed to cut rates? Does that need to happen for the economy to continue growing, for the market to go up?
We don't think rate cuts are necessary for the market to go up. I actually think if the Fed is forced to cut rates because of slowing economic growth, that's actually negative for the market. So, our economist view is you will get a couple cuts later this year as the economy continues to slow and inflation continues to come down. And look, I think your max bull case is you soft land and the Fed does a couple insurance cuts. And I think that is the situation where you get significant upside in equity markets. If we continue on the trend we've been on, which I would just characterize as higher for longer, is growth remains solid enough that the Fed can remain patient as inflation comes down. I think then the second half looks similar to the first half. Obviously, you have elections and some other stuff going on, but from an economic perspective, higher for longer isn't horrible for equity markets and is much better than a hard landing.
How do you trade around these elections? I mean, does it matter to you if Le Pen wins in France? Who even knows where that is, right? And B, after the debate on Thursday, if the Democrats keep Biden in place, does that mean you have to trade around a Trump win?
I think our view on the election, we view it as it's going to be a 50-50 toss-up going into Election Day. That's still our view. I know the odds moved a lot last week, but you saw a similar move in the odds back in 2020, and they ultimately kind of reverted almost back to where they had started. So, if you believe you're going to be 50-50, I think what you're trying to identify here is the key themes to trade around the election. And to me, corporate taxes is probably the cleanest way to trade the election because there's a clear policy divergence between the parties, and it's something that's easily identifiable and easy to trade. Tariffs are a little trickier. Both parties kind of are okay with tariffs, so I don't think there's as much divergence there in that space. And then you have some sector calls, and banks, I think, is the one that's been front and center for a lot of people. A lot of investors we talk to expect if Trump odds improve that is positive for the banking sector. You also got CCAR results last week. You also got what looks like a little bit of a rollback in Basel III that's supportive. So look, trading the election to us is a 50-50 shot. So you pick your theme, and we do think corporate taxes and banks are the ways to do it.
Stuart, great to get some time with you. Thanks so much for coming in. Stuart Kaiser there, head of U.S. equity trading strategy at Citi. Now, coming up, the Supreme Court is ready to rule on Trump's immunity over his criminal charges to overturn the election. We'll discuss the impact of that decision next. This is Bloomberg. Today, the U.S. Supreme Court will rule on former President Trump's claim that he's immune from criminal charges over attempts to overturn the 2020 election. Joining us now is the host of Wall Street Week, David Westin, who is also a lawyer, who also clerked for a Supreme Court justice, so you know of what you speak. What's the likely ruling that we're going to get from the Supreme Court?
Well, it's always tricky to judge based on the arguments, but if you looked at the arguments, you'd say basically they're going to remand it and say sometimes the president's immune, sometimes he's not. It depends on whether what he did was private or public, and the trial court can decide that. Based on the discussion and oral argument and some concessions, actually, from Donald Trump's lawyers, you'd guess that that's most likely outcome.
So anything that he did while he was president in his official capacity as commander-in-chief. You can't prosecute him for that criminally.
Yeah, but the tricky part is what is official capacity? Because at the oral argument, his own lawyer conceded that things like actually knowingly fraudulently certifying an election or putting up a fake set of electors, that would be private, because that would not be his actions as a president, but as a candidate, and that's a private result. So it's not just anything he does as president. He actually might be held liable.
All right. So if they remand it, which I assume means kick it back down to a lower court, what does that mean for the cases that the DOJ has against Trump right now, especially ahead of the election in November?
Well, again, just judging from what the concessions were in oral argument and the questions from the bench, you'd say, well, they're going to go back to the district court. They said that that's where it probably should go. And then they'll have to have a hearing and arguments, maybe even taking of evidence on what was public and what was private. There's an earlier case, a civil case against Donald Trump, that's already gone through some of this process. And right now they're going through discovery at the district court to figure out exactly, did he use money from the government? Where was he? Things like that. So this could be a more extended process. And that does raise the question, if in fact he's reelected us for a second term as president, what happens to the case?
All right, David. So, I mean, this is very complicated stuff, especially for a non-lawyer to understand, but not as complicated as when I hear the term Chevron doctrine.
Yeah.
I have no idea what that means. And yet I hear the Supreme Court overturned it last week, and it's incredibly important to especially markets.
Yeah, I think this is a real sleeper, Matt. People have not been paying attention. And particularly, I'm not sure the business community has been paying enough attention to this. This has been a multi-year process through the judiciary as well as under Donald Trump and his prior administration to really attack the Chevron doctrine. What it says basically is when it comes to a regulatory agency, the courts will defer to their interpretation of the statute that gives them authority. Unless they're really off the rails, they'll really go along with the regulatory agency. The Supreme Court now this term has said no longer. The courts get to decide it from the start and decide whether that makes sense under the statute or not, which is overall thought to be a curtailment of the regulatory authority that's imposed on business. It really is a big decision.
And it's been, as you say, something that's brewing, not just this decision, but a number of other decisions. Does Congress have to do something about this if they want to turn around? Could Congress say, hey, listen, when we delegate authority to the EPA, we really want the EPA to make those decisions?
Well, as we used to say, ought implies can. When you say, does it have to? The question is, can it? I mean, Congress can't do much of anything, it seems like, these days. But there was another decision, actually, out of the Supreme Court about the SEC and use of administrative law judges and imposing fines, saying, no, you can't do that. You got to go to court. So there have been a series of decisions here that really have said, we're not going to have as much regulatory authority over corporations as we have in the past. That's where it's tending.
All right. David Westin, thanks very much. He is, of course, the host of Wall Street Week. You can catch that Fridays at 6, but you can see him all throughout the day on Bloomberg Television. Breaking news here, the Washington Post reports that the FTC has opened an investigation into Teva Pharmaceuticals. Bloomberg's Abigail Doolittle has the details on that. Abby?
On those headlines, Matt, we do have the stock down about 1%. At the lows, down about 2%. This after having climbed right after the open nearly 2%. So basically a 4% intraday move on these headlines. And the FTC, as you mentioned, has opened an investigation, according to the Washington Post, into Teva Pharmaceuticals, the Israeli generics company, citing the company's refusal to take down about 24 patents for some of its asthma and other inhalers. The company has until July 24th to cooperate with the FTC's demand. More on this story. But right now, investors taking the shares down 1.5% on the uncertainty of what's ahead. If we take a look at what's happening for the S&P 500, a little more certainty there. Not much. We have the S&P 500 up fractionally, but it's a broad-based gain, Matt. We have energy up 1%. We also have utilities, healthcare, and financials all up 1%. A few of those sectors, as you know, though, defensive, so maybe that's not quite as bullish as it looks. To the downside, tech and communication services down both more than 0.5%. Those are those heavyweight mega cap tech sectors. So in some ways, it's going to be interesting to watch this day to see whether or not those big tech names, including NVIDIA, bring the markets down. Again, the S&P 500 right now up just fractionally.
All right, Abigail, thanks very much. Abigail Doolittle talking to us about the breaking news on Teva, and we are seeing the S&P pretty much unchanged. I mean, there is a green arrow. It's up 7/100ths, 8/100ths of 1%, but the NASDAQ is down 1/3%. The Dow Jones Industrial Average, if you care, up 300 and change. Coming up, the market-moving events you need to be watching. That's next in our trading diary. This is Bloomberg. Time now for the trading diary, what you need to be watching today and the rest of this week. We get May construction spending at the top of the hour. We also get June ISM manufacturing numbers. On Thursday, U.S. markets are closed for Independence Day, and the U.K. will be holding its first national election in 5 years. We close out the week on Friday with the U.S. jobs report, even though most people probably will be taking that as a bridge day for the long weekend. This was the Countdown to the Open. I'm Matt Miller. This is Bloomberg.